What's up, guys? This is Damon from Stock Barometer. I'm going to be giving you a list of 5 support-based stock picks for this week. As you probably know, most weeks I have somewhat of a theme. I think last time we were looking at cheaper stocks like penny stocks, but this time most of our trades are going to be based on popping above a support level. So these are the top 5 stock picks for the week of July 20th. Only one of these is on a big exchange. The other are on, I think, the American Stock Exchange. Well, you'll find out when you plug these in. But the first one we're looking at is Citibank. And you're going to find a commonality in all of these. That is, we're all above a strong support level, or we just popped over a relatively strong support level. So here's Citibank. You can see we've had a gap. You can see that more clearly with these candlesticks. We have a gap trade. And you generally want to trade bullish if the gap is like this. If you're out of that recent trading region and the volume is very high. If this volume bar was not high, I would not be recommending this trade. But this generally tells us that the fundamental characteristics of how Citigroup reacts to investors is going to be a bit different. It's going to be strongly bullish. After a gap, if you see this deliberation candlestick pattern, which is a thick green candlestick followed by a thin green candlestick above that green candlestick, that's a pretty decent sign. You could say it's pretty reliable in predicting an upward trend. What this really represents is investors getting some sort of news that happened on July 16th, probably earnings, and then on the next day, many investors wanted to get in, but they thought maybe the price was too high, so they just didn't buy as much as the day before that. However, what generally happens statistically is that the next couple trading days bring the price even higher. So we're going to want to get in on this, not only because of the gap on the candlesticks, but because we're above a support level and there's no real resistance level in sight, which means it's much more likely that the stock goes up than down. Also, the Fibonacci's are bullish in the short term, so if the stock does fall, it's probably not going to close that gap. Anything interesting here? Okay, one thing we do have to worry about is that Citibank is looking to be oversold, but we don't have a selling signal yet. And generally, the stochastics that you look at, if they're above this 80 bar after a gap, they don't really mean anything. The gap really screws with the stochastics calculation. So you can ignore the stochastics after a breakaway gap like this. The Arun lines are showing a bullish change, which corresponded to this slight upward trend prior to the gap. So we do have a bullish trend confirmation, and the MACD line is telling us that we probably are about to get into a period of upward momentum. So this is a really good stock pick, and this is probably my most recommended stock pick for the following week. Get in on Citigroup, get in early, ride that trend upward, and take profit when you think you've reached a significant level, or when, here's a pretty good way of determining when to get out. When you see the black and red line cross, that's a time to get out, usually. And if you want to play a bit more risky, you can wait until they cross, and then the black line, or the red line even riskier, begins to fall below that 80 level, like you see around here at this point. Okay. All right, so we're going to move on to the next one, NAVB. I have been watching this stock for a long time. I haven't gotten in on it. It's a penny stock, I believe. Yeah, it's a penny stock. And it seems like a decent company. It seems like they're working on some pretty good stuff. So I've been thinking of getting in on this as an investment, not as a swing trade. But actually, at the moment, it's looking like a pretty good swing trade. We're right above a level of support, 2 cents above that level of support. So we're pretty much protected from a downward fall if that happens. We also have the Fibonacci's, which says that even if we hit that support, we're probably going to bounce back regardless. The characteristics of the oscillators don't really tell us much. At this point here, around June 10th, it looked like the trend switched based on the Arun lines, and you can see that right here. The trend did switch, and the momentum has been upward ever since. You might be thinking that you're getting in too late. No, not really. You wouldn't be getting in too late, or you would be getting in too late if we didn't see any support below us. But because we just broke a strong level resistance, this is actually a very good time to get in. Otherwise, you would have gotten in another support level. If you see an upward momentum and you see a resistance above you, you generally don't want to get in. You want to wait and watch until you break that support level. So that's what I was doing with NAVB. I saw the upward momentum, but I didn't get in and I didn't make this recommendation because I saw we had this resistance level at 1.76, and we don't want to get in just to see the stock hit the resistance and bounce back. So now that it's broken that resistance level and it's become a support instead of resistance, this is a really good time to get in on NAVB. Also, we have this bullish Harami candlestick pattern, which generally is followed by a bullish trend. I'm going to move on to BTX. I don't know why, but this time a lot of the stocks that are just above support levels have been on the American exchange. This one, you can see we just broke a support level at 3.48, which is 2 cents below where we're at, which is great. Unfortunately, we have a resistance level at 3.79. So to reach 3.79 would be a 8% increase in the value of the stock. So you'd get an 8% ROI on a short-term swing trade, which is pretty good, especially if you put in a lot of cash. And because we have this downside protection, you don't have to worry too much. If you want a really safe play on this, what you can do is you can immediately buy the stock, and immediately after, you set a sell limit order for two places. One is at 3.79, one is at 3.48. So this would be a risk versus reward play. You'd be risking losing 2 cents versus gaining 29 cents. It's a pretty safe play in terms of take profit versus loss, but the loss might be more likely simply because we're closer to the support level. However, you can tell that the Arun lines are actually getting closer, and if they do cross, this downward momentum might switch and start heading upward, which would be a great thing for us. You can also see that the momentum is kind of evened out. No interesting candlestick patterns though. So this would be a safe risk versus reward play, but you might end up getting out before you make any profit just because of the sell limit. Alright, this one is Inuvo. Nothing interesting in terms of candlestick patterns, but we did have a lot of buying. The volume is still low, so it doesn't mean much. Again, this is going to be a support play. I don't think there's anything interesting here. So this play is based on support. Let's check out the support level. And there you go. We got a support at 299, so we're pretty safe. We just broke over that level with this big white candlestick. And there's no real strong resistances above us. So we're at what seems to be almost an all-time high. And because we're just above that support level, it's pretty safe to get in on this and see how far it can go. The Fibonacci's are bearish, which is a bit worrisome, but the support level is so strong that we really don't need to worry. If it hits that support level, it'll probably bounce back upward. This is more of a toss-up play, but what would be interesting would be to see how far this can go upward, especially when you can see the trend is bullish in the long term. This might even be a good investment or position trade, not just a swing trade. And then we got SIF. I think SIF is actually on the pink sheets. Let's take a look here. Again, we're above a support level. This chart is wrong. We're at 14.65. We just broke this. It says it's resistance, but it's actually a support. 35 is extremely strong. And if we break that and stay above it, we're pretty much safe. The characteristic of this stock would change to have this as a bottom. So it's very unlikely that we will fall below 14.65 unless there's some strange news event. It's a very safe stock to get in on. We just came out of the oversold region, and hopefully we're going to gain some momentum soon, but we don't see that yet. If that happens, it's likely that we can ride up to what was in the past the normal price, because we've been sideways for quite a while and we are kind of reeling from this downward trend. It would be nice to see if we can come back up from that just based on that support level, because we're at an all-time bottom, and it's unlikely the supports could be broken. There's only really one direction to go from here, and that's up. Nothing interesting in terms of candlesticks, but this again is kind of a toss-up play, but it would be a very rewarding toss-up play if we can get to the next significant resistance level, which I guess it would be this number. So our investment would give us about a 37% ROI. So you put in $100, you get $137 back. It'd be great if we can get there. At the moment, there's no real sign that we have that momentum, but we're at this support level, and we've been there before. So, I mean, you could have made this stock pick a while back and be holding on to the stock. As you can see, it's leveled out. There's no real reason I chose this now, other than we already touched that oversold region. Previously, we weren't at that region, so there's real no indication that we would bounce back. We kind of touched it there, but the red line never dropped below. Now that the red line is actually out of that oversold region, it should bounce back, but we're not seeing that, so this is a bit of a toss-up. Fortunately, the MACD line is getting pretty close to zero, so we'll see what happens here. This one you might want to wait, or you might even want to say to your brokerage, put a buy limit order at, I don't know what you would put it at, because there's no real price points here that are interesting, but you might watch this for a bit, and if you see some interesting signs, like if you see the green Arun line starting to go back upward, you might want to buy, or if you see the MACD line break the zero line, you might want to buy. But in this case, I mean, look, there's really no reason not to hold on to this, because it's not going to fall below 14.65, and it really has only one direction to go from here. Unfortunately, the last 3 months has not seen any movement, but as volume begins to increase, which it is doing, as you can see here, the movement of the stock will become more volatile, and it's more likely will go up than down. So those are the 5 top stock picks for this week. Go ahead and take your pick. Probably the best one is Citibank, but you also got some good investments like NAVB. If you have any questions, leave them in the comments section below.